Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, we've got Steve. How are you going, Steve?
Hey Ollie, good afternoon everyone. Yeah, I'm great.
Lovely to hear. Okay, so let's move into the agenda for the video ahead. For any of our returning viewers, this will all look pretty familiar, but for any of our new faces here, this is how we normally run it. So, starting off, we'll take a look at the key events from last week and analyze them looking at our key themes and see how this drove prices. Next, we'll move into the week ahead section where we'll put a spotlight on some of the major events coming up for the week ahead, see how this fits in with our key themes, and give our take on where we think prices will go. We'll then move into the technical corner. We'll be putting a spotlight on a couple different markets using our technical analysis and using our technical indicators to give our take on where we think the trades will go for the week ahead. And last, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. So moving into last week section, starting off on your screen, you'll see your top traded products from last week. I find it interesting. We've got a couple pound pairings in there, got a couple yen pairings, but otherwise not too many surprises. How about you, Steve? Any surprises in there?
I'm really surprised that the Aussie's not there. There's 1 week until the RBA, the race that stops the nation, and it's just not there. It's my favorite pairing as well.
I'm sure we'll be seeing a return next week. Okay, so moving into the last week section.
Yeah, so I mean, with the last week we briefly touched about the sort of China data that came out on the Monday. Obviously, their retail sales wasn't that great, but it was good to see with their sort of GDP following obviously the sort of imports and export numbers that they had the previous week. They did hold there basically the loan rate at 3%, which is equivalent to our sort of interest rate decisions. We also looked at the sort of CPI, so Consumer Price Index. So Canada also continuing that sort of trend. There was the unemployment, the better unemployment data. So good to see with Canada that's improving. The UK, it was expected to be 4%, but we actually saw it drop to 3.8%, which was a big relief for the UK. It did see the pound sharply drop, but yeah, it is good to see with the UK considering that the inflation rate is way too high, and especially like what we said a while back is that with the English, they like to drink, and hopefully the beer's a little bit cheaper now with the inflation rate going down. But the big sort of headlines that we actually saw was really the US data. So despite the US shutdown, we did actually see the data be released. So the pe- the consumer price index, we saw it was less. It was a bit higher than the previous month, but year on to year it was still less. So it's very interesting to see with the sort of data, considering that it was actually released on the Friday, on our Friday with Sydney time. There was probably, I guess, a more muted response considering the sort of lack of liquidity on Fridays, as well as the tendency that a lot of traders don't try to they try to avoid trading, especially on Fridays, considering they might be locking in before the weekend some profits. So it was really interesting to see that. Obviously, with Powell's mandate, is mentioned previously that the concerns were inflation going up as well as unemployment increasing. So good to see that from the US. One of the only sort of datas, but um, yeah, we'll see if we get any other sort of data with the US shutdown.
And just to touch on that one as well, like as you say, the price reaction on Friday was somewhat contained on that, but I think that's more reflected on the open this morning. Like we saw some major jumps, major gaps on the open today, which I do think is probably accounting for that CPI. But moving from one inflation metric to the next, we've also had the Flash Purchasing Managers Index, or PMIs, last week. Starting off with the Eurozone, it came in largely as expected for the manufacturing. Services was slightly higher, but what this did do is it firmed the case for the ECB to likely hold their rates at the meeting this week, which Stevie will touch on a little bit later. But price reaction to that was we did see some buying on the euro, although this was relatively contained, with the euro's largest gains actually coming against the yen, which was up 0.27%. Next on the PMIs, we had the UK, which came in as expected. Wasn't too much of a price reaction on that. Likewise for the US, which came in at higher than expected, but did have a mixed reaction, with traders largely waiting for the CPI on that one. So for the UK region, though, I did want to talk about the retail sales, which came in surprisingly better than expected, right? 0.5% against the negative 0.4%, which was forecast on there. So what this did is that the data reflected a pathway for the Bank of England to hold their rates to curb inflation, and as a result, did lead to some pound strength. As well, we did see the UK FTSE 100 push up towards an all-time high on Friday following that release. So definitely the equity markets were loving it on there. Had the US government shutdown has delayed through, and I did actually see a quote on Reuters this morning, which came from the White House late Friday trading, which basically said they're not expecting any inflation data for October to be released. So read between the lines on that. I do think we're in for a bit of a longer period of the US government shutdown. This week as well, oh sorry, yesterday just gone, we did have the EU daylight savings alongside the Swiss and the UK. So for anyone who's looking to trade on the European session later today, definitely keep an eye on the clocks for that one. And also moving into the all-time highs. So I think overarching themes on here, we had all-time highs from a lot of the major indices markets all across North America. We had Japan, had the FTSE, had South Korea, as well as the ASX 200 for the second week running. Probably to the surprise of nobody. I do think key theme for this week was definitely easing cycle, and a lot of sentiment is pushing for higher equity prices overall. And yeah, gold as well,
Yeah.
running for that 8th week running.
I mean, it's insane that it's 8 weeks running when it comes to gold, and obviously silver as well. That as I mentioned, obviously the poor man's it's always been the poor man's gold with silver, but there's always a lot of correlation between both. What we did also see was the US-China trade war update. So a lot of mixed messages throughout the week. So bit of, I guess, back and forth. So the US kind of trying to really stronghold China, and then China retaliating with some talks. But towards the end of the week, it was pretty much, you know, uh, Trump really wanted to say that he pretty much said that everything should be fine. It would hurt both countries, which is completely correct. Is that right now we're seeing that the soybeans being bought from China, they're coming from South America. They're not. It's affecting the U.S. agricultural, for example, as well as a lot to do with the sort of rare earths and the sort of talks. We also saw with earnings season. So earnings season started. We've seen a couple of two regional US banks close. So what this was basically Western Union and Zions Bank. And Jamie Dimon actually came out and said a quote: "When you see one cockroach, you probably see more." And what he was referring to was that if there's a crack in a company, you might see a few more sort of defaults in these sort of sense. So um, post the investment banks, we saw really good earnings, but then again that could be because of their sort of clientele being more of the sort of high net worth individuals. But with these regional banks, it's showing that there's a lot more people having a lot of debt. They're going paycheck to paycheck in the US. A lot of the high net worth US is accounting for most of the GDP, as well as a lot of so it's a skewed sort of economic sort of field. So it's interesting to see with that. We also saw sanctions on two Russian oil companies, which make up 5% of the actual world's oil. we'll go into a question very similar to that a little bit further. We did see something very interesting. Obviously, Trump had a meeting with Albanese or Albo, and they came to an agreement when it comes to the rare earths, which was probably one of the best agreements that we've seen for quite some time. And this is really just to ensure that, because basically China accounts for about 90% of the rare earths. Rare earths itself is not, it's not hard to actually get the rare earths. We've got abundance. However, when it comes to the machinery, when it comes to how to actually the technology in order to actually get it out of the ground, as well as also um, any of the more like the chemicals out that what the processing chemicals just to distribute that in sort of land sites. That's really the difficult, and China has a big sort of advantage when it comes to that. We also saw just the Trump terminating the US-Canada trade talks, which was pretty interesting to see.
Yeah. It did look like a bit of a knee-jerk reaction, wasn't it? It's a TV ad, wasn't it? Okay. Well, we do love him this side of the world, at least. I mean, give or take on that, but definitely do love the entertainment for it. Starting off for this week, we did have a public holiday for our friends across I guess the Tasman Sea. New Zealand public holiday today, so Australia was the ones kicking off the market major. But then central banks is the key highlight for the week ahead, isn't it?
Yeah, this week it's going to be fairly interesting. Again, we've got one of those weeks where we've got four central banks. Fairly, I mean, with the Bank of Japan, for example, it's expected to hold, considering that the Prime Minister's just been just come in. So wouldn't really expect too much to change when it comes to Japan. I know that you're probably more of an expert when it comes to the Japan as well as the European Central Bank. But that's pretty much going to be expected to be a hold. I think with the European as well, seeing those sort of less data. The Bank of Canada, so we're looking at the sort of cutting. I guess with the unemployment rate being a little bit better, as well as retail sales, you could say that there could be a few sort of curveballs in there, but I would think that they would probably be looking at cutting the interest rates, considering that obviously the unemployment rate is still high for their population. But the key is going to be around the US Fed rate. So obviously with the CPI inflation data that we saw last week, so prior to that, we're looking at about 99% of a 25 basis points cut on the FME CME, so the Fed CME tool. So basically, this works out what the probabilities is, and then for the December, it was about 91%. This is pretty much almost priced into the market, so I can't see it going too like it can't really go any other way. I think most traders, a lot of institutions have already really factored this in, but going to be really looking towards the Australian CPI data as well. This is probably the sort of that sort of data set could potentially see some, interesting to see how we're going when it comes to our inflation. Again, it's something that Governor Michelle Bullock has mentioned, and yeah, we've got the China Purchasing Managing Index figures just to see whether how the actual companies are going in China. So it'll be interesting to see. But yeah, there'll also be Euro.
Yeah, so the Euro CPI, the flash estimate. I'm not expecting too much of a market reaction to this, given that it is coming right after the ECB policy rate. So likely it's not going to sway away from future forecasts in terms of movements from the ECB. So probably fairly contained on that. The US government shutdown, as we said, it sounds like it's going to be sticking around for a fair while. So we are missing out on the core PCE price index, which historically is a very important piece of data in shaping Fed policy. I've also got the unemployment data, which, man, we've been kept in the dark for the unemployment data for a little bit now. So I can't imagine going another week is going to do too much. Also out of the States, we've got the US and Canada have their daylight savings time shift. So definitely something to keep an eye out for all of us Aussies looking to trade the end of the US session. Also, wanted to just quickly touch on for the Fed as well. As you mentioned, Steve, it is largely being priced in, but I am very excited to see when Jerome Powell starts his speech and the meeting afterwards, if the price has a big reaction. Brenda, if you're watching, I know we've spoken about that before, but I'm definitely going to be keeping an eye out. Okay, so moving into the technical section now. So I thought this week I wanted to start off by looking at a market which would actually be directly impacted by some of the central bank decisions for this week. So I wanted to start off on the US dollar and Japanese yen. We're on the weekly chart for the moment. And as we can see, pretty much dating back since around mid-April, we've gone on a pretty strong bull run. We did go ranging for a little bit between the 146 and the 150 for a little while there, before making a pretty strong breakout towards the start of October. So I'm going to move this into the daily chart for the USD against the yen, get a bit of a better idea for where we're sitting now. So as I mentioned, we can see dating from around the start of July till really the start of October, we were ranging between the 146.4 and the 150 price point here. Did see a false breakout and a quick retracement into this range. And then it was pretty much trading sideways, and then we saw a significant jump above. Where I put the 150 here is that it was acting as a key resistance price point to contain the prices in around late September as well as early August. And when we did see a sharp break above, we saw it find resistance at 153.1, trade back down to find support at its previous resistance. Now, where this is significant is that historically, when you see a price break above its resistance, come down to find support here and then continue to trade up, it is typically a signal of buying momentum on the currency pair. But I do think it's quite interesting that both of these currencies at the moment do have pressures on them to weaken their currencies, such as the Fed cutting their rates, such as the yen with the new prime minister coming in who is historically yen negative. So from a technical standpoint, I'm thinking where we're sitting now is a very significant price point. So I think if we do see a break above its October highs, this will push it into its highest price since February this year. So if we see a break above this swing high and a hold and a next trading session to start moving higher, I do think I'll be looking for an entry to buy with a challenge towards its next significant price points. Similarly, if we do see it find resistance at this price point, fails to break, and it does actually trade further down, I do think that we could see it move further into its prior trading range, mostly off the back of the Fed meeting. So I do think the Fed meeting will be the key driver for this one. So I'm looking for a signal of either buying momentum or selling momentum. But because it is on a bit of a teeter-tot at the moment, I am going to need to have a effective stop or risk strategy in play. For example, if I'm looking for a sell at any point below here, around the 152, high 152s, I'll be entering in a sell with probably a stop at its October highs. Likewise, though, if I am entering to a buy, I'll probably be looking for a stop towards its Friday lows, which I believe is around the 152 mark. So the next market I did want to look at is Bitcoin. So I think this is one of the ones which we know is grabbing a lot of the hands this year, especially with gold's recent bullish run. It is seen as another market to potentially hedge against the inflation. So for where the markets have been, I think from around early October, we have seen it's been on a pretty strong down channel. So it's been a bit of selling momentum after it did hit its all-time highs. Except late last week, it looks like we did find support and it started to trade higher over the weekend. But from looking here, I'm seeing a sequence of higher lows, albeit not too much change, but a sequence of higher lows nonetheless. And it's already broken past its previous swing high, which would tell me that there is some buying momentum in play for where we're currently sitting. I do think as well it is sitting at a pretty interesting price point. So I do think it will push up towards the 116 personally. I think it's got a bit of momentum in here, also shared by our MACD indicator down the bottom. But I think if we see a break and a hold above its prior resistance at 116, a break and a hold, I do think we could see it push higher towards the 120 or to the next psychologically significant price points. But I am looking for a confirmation that the buying momentum is in place. If we see a break and a hold on consecutive sessions, I'll be looking for an entry to challenge in towards next psychologically significant prices. Furthermore, if we do see it find resistance and fails to break the 116, I do think we could see it move lower towards its next prior key price points around the 112K or 110K.
Very
Okay,
interesting
so
with that, Ollie, with the Bitcoin chart. So, yeah, especially leading into November, where we've got the Australian CryptoCon, as well as last year CryptoCon, it actually broke 100,000 for the first time USD. So, yeah,
let's see. It's going
interesting
to
with
get.
that.
If anyone's going to CryptoCon, let Steve and I know. We'd love to meet you. Okay, so moving into the questions. Steve, would you like to take it away with question one?
Yeah, question one is how will the US sanctions on Russian oil companies impact prices? Obviously, Trump's announced two Russian companies. I'm not going to even bother with naming the names because I'm just gonna, yeah, it's not it's not going to sound great if I try to attempt. It's a bit too hard for me, unfortunately. But yeah, no, with the two. So like I said before, it takes up about 5% of the world oil. So I guess the Trump has really tried to do this to prevent India from buying Russian oil. Obviously, he's really trying to actually cease the Russia-Ukraine war and put a limitation on, when it comes to Russia and, how much they can actually get for their oil, which will, have an impact on what they can actually do when it comes to their sort of drone attacks, all that sort of stuff. But because Russia is actually they're classified as a non-OPEC country, so they're the biggest non-OPEC country. OPEC, which is the organization of the petroleum exporting countries, are basically the main countries that make up the world's oil. So you'll see the likes of Saudi Arabia, Iraq, um, Kazakhstan, Oman, and quite a few of these other sort of countries that are very oil rich. And basically, lately they've been kind of increasing the sort of supplies, the barrels per day, and the demand probably hasn't been there. So um, there has been a bit of a increase in the oil price recently, but that I mean overall. Considering the sort of supply and demand, unless, for example, Trump does decide more Russian oil companies, hopefully it will kind of settle when it comes to the oil pricing.
All right, and I'll take it for question two. So, how would the new Japanese PM impact the Bank of Japan? So, for the new Japanese PM, Takeichi, she is expected to introduce a more expansionary fiscal policy using things such as increasing government spending or tax cuts, all of which would make it a bit more difficult for the Bank of Japan to hike rates in the short term, as it may be seen as counteracting the government's goal of stimulus. Also, as much as we do hear about independence of the central banks, and it's continually affirmed from both sides, the BOG does want to be supportive of the new PM coming into the role, which I don't think will make their job a bit easier in the long term. So, in the short term, I'm expecting the BOJ to hold rates as they look to determine the impact of these policies. But my personal expectation is that with the new PM, it could prompt the Bank of Japan to put a heavier spotlight on inflation in Japan and the increasingly weakening yen over the coming months, which potentially could lead to a more aggressive tightening policy over the next meetings. Okay, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting in a recording to the VIP chat room as well as on Telegram. Also, just wanted to make a quick mention that over the weekend we did successfully migrate all of our MT4 and MT5 accounts onto new servers. All the issues on that seem to be all ironed out for the moment. But if anyone does have any questions about anything like that, please feel free to reach out to Steve or I directly, or your relationship manager. We've always got the support team in place as well if you need. All right, well, that's all from me. Thank you very much, everyone, for watching. And Steve, I'll see you later.
Thank you, Ellie. Good evening, everyone.